Hello everyone, we are from the Department of Applied Economics, all gathered over here to present a series Economic Talks, wherein we will be presenting various topics. Today, I, Ananya Pandey, along with my fellow classmates, will be talking about rural credit. Rural credit refers to financial services and funds provided to individual farmers and businesses in rural areas to support agricultural activities, promote rural entrepreneurship, and address the unique financial needs of rural communities. This type of credit is essential for sustaining agricultural production, improving rural livelihood, and fostering economic development in remote and less urbanized regions. Access to rural credit allow farmers to invest in seeds, equipment, and technology, empowering them to enhance productivity and contributing to the growth of the agricultural sector. Now, needs of rural credit. Number one, lack of saving. Many rural households have limited savings, making access to credit essential for them to make necessary investments. Number two, cyclical nature of agriculture. Agriculture is often subject to seasonal cycle where farmers require credit to meet their expenses during planting and harvesting season. Number three, limited access to formal banking. In many rural areas, formal banking infrastructure is limited. Rural credit help bridge the gap, providing financial services where traditional banks are not be easily accessible. Number four, economic diversification. Rural credit is crucial for promoting economic diversification by supporting the development of non-agricultural activities and small businesses. Number five, social welfare. Access to credit is essential for promoting social welfare in rural communities by addressing housing, education, and healthcare needs. Thank you. Now I'm handing over to Ashita to explain further.
Thank you, Ananya. Now I am going to talk about classifications of rural credit. There are various types of classifications. Number one, short-term credit. They provide loans for seasonal agriculture needs, including crop production and cultivation activities. Number two, medium-term credit. They provide loans with a slightly longer repayment period, typically used for a purchasing equipment, livestock, or making improvements to agriculture infrastructure. Number three is long-term credit. Loans extended for long-term agriculture investments such as land development, agro processing units, or setting up permanent infrastructure. Number five, production credit. Credit provided for agriculture inputs and activities directly related to the crop production. Number six, consumption credit. Credit designed to meet the household consumption needs of rural families, ensuring financially stable during non-productivity seasons. Number seven, formal credit. This involves credit extended to formal financial institutions like bank, cooperative societies, etc. Informal credit. This includes credit extended through informal sources like money lenders, traders, and relative friends. Thank you. Now I am handing over to Sakshi. She will explain further.
Thank you, Shita. Now I'll be talking about the schemes provided by the Government of India for rural credit. The first one is Pradhan Mantri Mudra Yojana. This scheme aims to provide loans up to rupees 10 lakh to non-corporate and non-farming small micro and enterprises. The second one is Pradhan Mantri Jan Dhan Yojana. Although primarily focused on financial inclusion, Pradhan Mantri Jan Dhan Yojana also facilitates access to credit for rural individuals through overdraft facilities and micro insurance. The third one is National Bank for Agriculture and Rural Development schemes. NABARD offers various credit schemes for agriculture and rural development, including short-term loans, long-term loans, and refinance facilities. The fourth one is Kisan Credit Card Schemes. This scheme provides credit to farmers for purchasing agricultural inputs and meeting other farming expenses. It also includes insurance coverage. The fifth one is Rural Self-Employment Training Institute. These institutes offer skill development training and credit linkage for rural youth to start their own enterprises. The sixth one is National Rural Livelihood Mission. National Rural Livelihood Mission provides credit-linked self-employment opportunities to rural households living below the poverty line through self-help groups. The last one is Rural Infrastructure Development Fund. This provides credit to state-owned entities for financing rural infrastructure products. These are the schemes that are provided by the government for rural credit. Thank you, and I'm handing over to Anshika.
Thank you, Sakshi. Now I will be talking about challenges and remedies or solution to improve rural credit. Firstly, I will be talking about challenges faced under producing rural credit. There are several challenges faced when providing rural credit. First one is lack of infrastructure. Rural areas are often lack proper infrastructure such as roads, transportation, communication networks. This makes it difficult for the financial institution to reach remote areas and provide credit services. Second is limited financial literacy. Many rural communities have limited financial literacy, which means they may not fully understand the terms and conditions of credit products. Third is seasonal income. Rural communities often rely on seasonal incomes from agriculture or other seasonal activities. This irregular incomes makes it challenging for the borrowers to meet regular loan repayments. Fourth is limited access to banking services. Many rural areas have limited access to banking services with no bank branches or ATMs. This makes it difficult for the rural residents to access credit services and repay the loans. Last one is climate change and natural disaster. Rural areas are often more vulnerable to climate change and natural disaster, which can lead to crop failures, livestock losses, and economic shocks. These events can make it difficult for the borrowers to repay the loans and increase the risk for the lenders. Now, I will be talking about remedies or solutions to improve rural credit. First one is strengthening rural financial institution. In this, enhancing the capacity and reach of rural financial institution such as regional rural banks, cooperative banks, and microfinance institution can improve access to credit in rural areas. This can be done by providing them adequate capital, training, and technical assistance. Second is promoting financial literacy. In this, educating rural communities about financial management, credit option, and the importance of credit can help them to make informed decision and also improve their credit worthiness. This can be done through awareness campaign, workshops, and training programs. Third is encouraging credit guarantee schemes. Establishing credit guarantee schemes can help them to mitigate the risk associated with lending to rural borrowers. The credit guarantee schemes for micro and small enterprise was launched by government of India to make available collateral free credit for the micro and small enterprise sector. Both the existing and the new enterprise are eligible to be covered under this scheme. The last one is providing subsidies and incentives. Offering subsidies or incentives to financial institutions that provide credit to rural borrowers can encourage them to expand their lending activities in rural areas. This can include interest rate subsidies, loan guarantees, or tax incentives. Overall, a combination of these remedies or solution can improve the rural credit and enhance the financial inclusion of rural communities. Thank you. Now I am handing over to Shrishti. She will explain further.
Thank you, Anshika. Now I am going to conclude the topic. So, as of 2021, the rural economy contributed around 46% towards the national income of the country. Meanwhile, the agriculture and allied sector contributed around 18.8% towards India's gross value added. The Indian government and various financial institutions are constantly initiating numerous programs and policies aimed at improving the availability and accessibility of rural credit in India. The government had consistently increased the agricultural credit flow every year. In 2022 to 23, the target was set at rupees 18.5 lakh crore, which in the year 2023 to 24 was increased to rupees 20 lakh crore, with the focus on animal husbandry, fisheries, and dairy. A new sub-scheme under the Pradhan Mantri Matsya Sampada Yojana was also launched with a targeted investment of rupees 6,000 crore to enable the activities of fishermen, fish vendors, and micro and small enterprises. In 2019, the RBI also raised the limit of collateral-free agricultural loans to rupees 1.6 lakh to enhance the coverage of small and marginal farmers in the farmer credit system. Other than this, the government has been providing interest subvention to make available short-term crop loans at an affordable rate and to boost farm output. It is given to public sector bank, private lenders, cooperative banks and RRBs on the use of their funds and to NABARD for refinancing RRBs and cooperative banks. Around 65% of the India's total population lives in rural and semi-rural areas, and around 47% is dependent upon agriculture for its livelihood. Hence, it is imperative for the government to make it focus on rural development, and thus it is also highlights the fact that why rural credit in India needs to be much more developed than it is now. It has become necessary for the government and the central bank to constantly come up with policies and strategies to improve the condition of rural credit in India, and not only for the purpose of developing rural economy but also because it would directly lead to the development of Indian economy as whole. Thank you.